Well, hello there, traders and friends right around the world. It is James here with you on behalf of Pivot Point Trading, bringing you this very important Wednesday afternoon market recap. What I'd like to do to begin this afternoon's quick discussion is start off with the Dow Transport Average. I don't regularly do this, but today we've seen a very important signal. Since May 2015, when we began to break down this macro support area, when we started to flinch below this area, our first target on the transports came in down here at 8,000. We actually hit this in early July 2015. And since this one particular candlestick, let me just show this to you, this one inside day candle over here, we've been somewhat bullish. We haven't been long-term bullish on the transports, but we've said to ourselves that the next cycle should take us back up to this very critical area of resistance as a back test. Well, over the past 7 to 8 trading sessions, we've seen quite a ferocious rally. We did see a little bit of a bounce, a pullback, and then this rally take off. As at the close on Wednesday, we have seen our first cautionary signal take place in the way of a candlestick. This is what we call a shooting star candle. It is exceptionally bearish, and what makes this candlestick even more significant is the actual location where it is starting to set up at. We are at this very important macro resistance area. Once again, it was support. We have broken down below this, and this is the first warning signal which we have to say that the Dow Jones Transportation Average is set up to roll over once again. On top of that, we've seen it rally back into that 100 simple moving average. This is where we're starting to retest these long-term bullish trends, which are now starting to suggest that the transports are beginning to roll over. Moving into the week, we had this bearish trade set up 8,295 as a really good rollover type of trigger. I stand firm behind this trigger. If in fact this does trigger, my first target once again on the transports is set up down here at 8,028, give or take a couple of points. We probably will come down to that psychological round number, that 8,000 level, which we touched in early July 2015, but right now is not the time to be going long the transports. And because of that, because of this one signal on the transports and how this has been somewhat of a leading indicator, when we come back full circle through to the Dow Jones, the S&P and the NASDAQ, we haven't seen anything near what we call a shooting star. We do have what we call a high wave doji type of candlestick. This is reflecting indecision once again. And surprisingly, the indecision is starting to happen once again at these somewhat relative lows, which we have set up in July and August 2015. I mean, we saw the early rally in mid-July, but since then we had this 2-day rally, and then the Q2 GDP came in at 2.3%, and really since that number was announced and released to the market, we have been selling off. Today was interesting. We saw the beginning of a push higher, at least for half of the trading session, but for the remainder of today's trading session, the equity markets actually sold off. It doesn't really reflect all too well in the Dow Jones Industrial Average, but if I zoom into the NASDAQ, look at this very similar type of candlestick setting up on the NASDAQ, very similar to what I just went over in the Dow Jones Transportation Average. This is exceptionally bearish. This is again a lower high relative to the high which we set up in mid-July 2015, a couple of weeks ago. And this is really telling us, look, be careful if you are in any long orientated trades, because the probability of a bigger correction or a pullback has just gone up exponentially. Again, we are at resistance on the NASDAQ, and this is a very, very strong indication that sentiment is starting to change once again at these respective all-time highs. Having a look at the S&P 500, surprise, surprise, we've rallied back up into this red resistance level, which has been drawn on my chart since early March 2015. And what type of candlestick do we see setting up? I mean, we didn't even get up there and hold at the end of today's trading session. We have what we call again another shooting star candle. The long upper wick is at least twice the size of the real body of this candle. And if you go back in time and have a look at other similar candlesticks, you can say, well, look, this was a shooting star candlestick at resistance back in the month of March 2015. We've also had a couple variations of them late April, early May. Again in June, another shooting star candlestick. And again, we've just got high wave spinning tops and doji candlesticks at resistance, reflecting indecision in these equity markets. Right now, once again, just to surmise the price action based off these shooting star candlesticks and the indecision on the Dow Jones mixed with the shooting star on the transports, it's very likely to assume at least that the markets are set for, again, some form of a bigger correction. Going back to the Dow Jones Industrial Average, this is something which we've again been on top on for the majority of this topping type of pattern, which appears to be setting up. about is that we've had these triggers and at least targets on where price, if in fact it does sell off, where will it go to and what do we expect next? My ultimate target is 17,210. This, once again, works very, very nicely with the long-term bullish primary trend, which has been in effect since 2009, and the series of higher lows which we have been setting up ever since that start of the most recent bull market, which has been in effect for its 6th year right now, verging on, the 7th year. So right now, at least, we've got good structure on the overall markets, and we're positioned very, very nicely on individual trades. Let me just recap some of the stocks which we went over during the most recent pro analysis workshop class on the Sunday of the past weekend. Apple was one trade which we spoke about. 117.35 was our bearish entry. Again, today we jumped down and we started the session lower. We rallied up intraday. We came back and retested our original entry at 117.35, but we started to see sellers at this location, at this old resistance level or this old support level. It is now starting to hold as new resistance. Pay attention to Apple. There is further downside, in my opinion, on the cards for Apple. Outside of that, we've got the Baidu trade set up, which hasn't triggered yet, but it's looking very, very nice. Caterpillar, again, is starting to roll over at this resistance level. It hasn't triggered yet, but it's looking quite bearish once again. CVX has been one of those trades at 87.52. Personally, I didn't take the biggest position in this stock as I spoke about over the weekend. I did cut back to probably half of the trade size which I generally type of trade or which I trade when we go through these trade setups, just because of this primary trend which has been in effect since the year 2002. But it looks as though we have definitively broken below this macro bullish trend, and our next target we are very close to. If I just get this back into perspective, it comes in at $82.34. We're very close to this. We're only $1.70 away, but Chevron really looks as though it's starting to move and continue in that bullish trend lower. Outside of that, we've got Goldman Sachs still basing its moving sideways. IBM today had a little bullish bounce, but the candlestick itself is still bearish. We did close up 30 cents, but it's nothing too bullish at this particular moment. It may be setting up some form of a bear flag, so I'm very interested, obviously, to see how IBM works out. Tesla today, I think in pre-market or post-market, it is down 8%. I'm not sure in dollar terms where that is, but expect Tesla to actually open up, in my opinion, somewhere down here, probably between 240 and 245. That is a guesstimate. At the moment, we are trading down 8%. I just haven't looked to see what the current price is. And as I do this recording, I'm just not figuring it out or working it out mathematically speaking in my mind. Walgreen Boots and Alliance has been one of those bullish trade setups, which again, I do not have the confidence in taking, on how the overall broader markets are starting to set up. It really looks as though we are setting up some form of a longer type of rectangular pattern, which inevitably does break up to the outside. But personally, I will be sitting out this 98.08 trade. And again, we had a very in-depth discussion about Netflix around that 120.72. It's very interesting because Netflix is broken above this level. It's trading at 123.71. I made it very clear that I would also sit out of this bullish bounce because it isn't really in agreement with the overall equity markets. Today, we saw what we call a doji candlestick. Once again, it's not all out a reversal type of signal. It's really, it can really continue the bullish bounce, or we will see a very quick pullback. Be open-minded. If we do see a big down day tomorrow in the price of Netflix, it will set up some form of an evening style reversal. That will be a reversal type of candlestick pattern, and I will bring you an update over the weekend in that Netflix trade because we may have a very bearish trade on this moving into next week's trading sessions. Outside of that, that is the close on Wednesday. And just to recap, very important signals taking place again in the equity markets. Be cognizant of these. Do not be complacent because these are very worrying and very cautionary signals starting to take place. Gold, again, is just continuing to move sideways. If my computer wants to work with me, let me just try and bring up this chart. There we go. It's still moving sideways, a very bi-directional and neutral trade on gold. I'm not sure which way it will break, but we're either going to see the retest of this old support as new resistance, or we're just going to see all-out capitulation in the price of gold. Again, I'm not sure what's going to happen. I'm very neutral on gold, and also because of that, I'm very neutral on silver. Very similar type of pattern. We've got that 1365 continuation trigger to the downside, which hasn't triggered yet, but there is a good chance that this will actually trigger, and our target on silver is all the way down here, about $12 on the ETF, so there is a long way for silver and gold to drop if in fact we start to see price action confirm these moves. Outside of that, very quickly, the dollar, just to recap, we've had these two trade triggers. 95.96 as a rollover, back down to support at 93.65. We've also had this continuation type of entry about 98.33 personally. I will not be taking either of these trades. It just gives me a gauge on how commodities markets are set to move. Obviously, right now, the price of oil has dropped, I believe, below 46 a barrel, which is a big sell-off. Again, it's in line with the broader commodity markets. Copper has also, I think, hit 6 or 7 year lows as I do this recording. So, I mean, this is broad scale commodity deflation occurring, and it's really working in, at least in comparison or against, I should say, the strength of the US dollar. As the US dollar continues to appreciate in value, expect the price of commodities to continue devaluing or depreciating in value as we move into the future. That will recap this Wednesday afternoon market recap. If you have any questions whatsoever, please email me success@pivotpoint-trading.com or schedule a call. I need to make a couple of calls right now, so I'm going to end this discussion right here. This is the Wednesday afternoon market recap. Share with friends if you have anyone interested in how this market is moving, but right now it's not the time to be complacent on this market whatsoever. We're really set up very nicely to see some form of a short-lived sell-off back down to this level, but what happens at this level, I cannot stress enough. It is so important for the health of this equity market, and what happens if we do see the eventual slope of hope rally back up to about 18,000 on the Dow. I will keep you up to date in this if you want more in-depth analysis of trade setups and market setups and structure formation, Dow theory, all of these types of things during this sideways consolidational period, which we've been in since December, November 2014. Have a look at Pro. I go through this each and every week in generally about an 80-minute discussion. It is recorded and it is posted up on our website under the Pro tab. All the best, everyone. Have a fantastic evening. I will be back most likely on a Friday. We'll see how the markets eventuate or how they play out during Thursday's and Friday's trading session. But right now, the immediate clues is that we are going to see, again, some form of push lower. We moved into the week very neutral, and it appears as though it is going to be quite a bearish week, in fact. Have a great Wednesday evening, everyone. It's James signing off on behalf of Pivot Point Trading. All the best. Goodbye.